Hi, everybody. Brian Valerio, Vice President in the Proxy Solicitation Group at Alliance Advisors. And today I'm joined by Joseph Caruso, who is our Chief Operating Officer at Alliance Advisors and also oversees all of the call campaigns and heads up the retail strategy. So, Joe, I know one thing that you and I have been talking about a little bit. Throughout 2020, there's been tremendous upheaval. Everybody knows about the tremendous upheaval that we've seen. It's been a tremendous year of change. And one of the key changes that we've seen is a lot of younger people have unfortunately lost their jobs and have more time on their hands. And one way that we've seen it in our business manifest itself is that it seems like these people are gravitating towards day trading. There's been some recent news coverage about this. The Wall Street Journal just wrote an interesting piece on this, highlighting the increase in day trading from the younger generation. And this has also been increased by the opportunity to get in with some of these very low fee brokerages like Robinhood and Charles Schwab. So with all of this coalescing, how have you seen this impact our call campaigns for the start of the year till now? I know at the very beginning of the outset of the lockdowns, we had some really good returns on our call campaigns because we had more traditional retail investors who were locked in their house. And it seems like we're having great returns. But am I correct in saying that we've seen a bit of a change over the past few months?
Yeah, you know what? You've not only seen a change. I think COVID, the whole COVID / more people either unemployed or a lot more people even working from home that might have more opportunity to play with day trading has increased. But the things that we're starting to find as a result of COVID has been more of an acceleration of what path we've already been on. You have the advent of the no-fee broker, even to the point where entities like Robinhood, which I've even used, make it almost like a little bit of a video game when you're buying stock with the confetti and everything else. And
Sure.
I think a lot of the younger generations that are more tech savvy and they're more apt to just using an app on their phone. They're buying, they're selling, and they're trying to eke little profits out of quick, either day or swing trades. That the pandemic and the cause of the more either work from home or out of work, I'd like to say maybe more work from home, maybe they have the income, the discretionary income to spend, has just accelerated a trend that started before COVID and has caused a lot of difficulty when it comes to bringing in a retail vote. And the reason is twofold. One, the younger generations of investors, the Robinhood type investors, they don't have that tie to the company that maybe a traditional pre-2020, 2019 retail investor had. They had more of a tie to the company and there was more of a brand. Now it seems to be more and more of the retail population, they're in and they're out. And by the time you get a proxy to them, if they happen to cross over that cusp of the record date, they don't even remember they own the stock. They could care less about the shareholder meeting. And that is creating such a drastic impact. In fact, a lot of smaller cap companies where the stock price might be more volatile, you'll have all of a sudden, I've seen a lot of our clients either doubling, tripling, or even quadrupling the retail base. So although it might be the same number of shares they had a year ago, they have 3 or 4 times the number of people in them. And they have 3 or 4 times the number of the people that are disinterested. And also most of your younger generations, on a second note, they're all on mobile devices. They're not taking, or typical, they're not going to take calls from unknown numbers, especially a proxy solicitor, because they have contacts saved in their phone. And if it pops up as an unknown number, they don't pick it up. And that means you have to leave them a message. You hope they call you back. So there's a huge disconnect right now.
So if I'm an issuer and I have a large retail base, but I need to get an agenda item passed, what do you recommend I do in light of these changes?
Okay, there's 2 things. There's one more. I would say it's a more planned retail campaign than what you're used to. But then I'll get into the second idea, after that, which is even more proactive. First, if you're a public company and you have the need, it's a necessary objective to obtain X amount of retail votes for a retail campaign, you need to be thinking of turning what used to be a traditional hire a solicitor, pick up a telephone, and call shareholders to a more broad-based, well-planned marketing campaign. Whether it's marketing or graphical material that you could use where the shareholder sees it and within 30 seconds understands something is going on. And if they feel like it, maybe they could vote even if they don't own the stock. More use of technology, especially for this generation that's a mobile generation, to use graphic more marketing type images, and you're able to push them to cell phones where they could click on them and read the message, understand what's going on, and then speak to an agent to vote, to vote their shares. And there's other things that we could use, to deploy, whether it's pre-recorded messages, very targeted mail campaigns. But the most important thing, one of the most important things is you need to have active management. And in very difficult situations, you're going to have stockholders, whether they don't want to vote, they vote against, they don't want anything to do with it, but they're key investors. They have a significant portion of shares. Some companies, it could be 10,000 shares. Some companies, it could be 1 million shares. What's important is that whether it's the CEO or the IRO or someone in the company who's able to convey a message to a stockholder, it has the willingness and the capability to get on the phone when the solicitor identifies a particular holder that they need to engage in. Because it's one thing to hire a proxy firm to do, a lot of the heavy lifting and a lot of the work to get these shares. But when you have certain key resistance pieces, and it could be an individual that has, whether 100,000 shares or 20,000 shares, enough of a position to move the vote, and they don't want to vote, or they want to vote, against management's recommendation, it's important that management's engaged in the campaign and they're able to pick that phone up and talk to the stockholder. A lot of times companies don't want to do that.
Now, and Joe, we're talking about here an individual retail investor, because I know a lot of management individuals are willing and happy to get on the phone with some of the larger institutional investors. But we're talking about a little bit of a shift here, right? Where the large individual retail investor in their stock, it probably makes sense if there's that resistance point for the upper level management to speak to that individual holder. Is that what you're talking about?
Absolutely. If you think about it, and I don't care what the dollar value of the stock is, but if a person has a significant amount of shares in a company and management's able to talk to that shareholder and convince them to support management, let's say it's 100,000 shares. How many accounts at 500 shares or 100 shares does a solicitor have to go after to make up the 100,000 share position? And it becomes a costly endeavor. Again, people don't pick up the phone easily. Even when people pick up the phone, they have a typical tendency, because they think everything is a phishing or a scam exercise, to even say that it's not them and they're not here, and call back and try to find out what's going on. That's why not only is it important for management to be actively involved, but management needs to understand this needs to be a broad-based marketing campaign to retail, so they don't feel like they're being phished or scammed when that call comes through, or we get them to engage voluntarily, in a proactive way, rather than having to chase the vote down. But more importantly, you can have a proactive retail campaign, and that's fine. For companies that have very significant retail populations, this is going to come up every year, and it's becoming a more and more costly endeavor. What's the way to avoid this? There's one big one. Build up your institutional base. Expend money on your investor relations programs, on identifying the right stockholders to enter your company. Be very proactive, because if you could spend a little bit of money or more money and time and resources on a robust investor relations program, on driving more institutional money into the stock, you'll save a lot of money, time, and headache on chasing retail votes during proxy campaigns. So I think that's key.
You then need to nurture that relationship, right, after the initial purchase, right? That's got to be an ongoing effort to kind of keep in touch with those holders, those large institutional holders, so that when it is time to call them and ask them for their vote, it's not going to be the first time I've heard from you in months. Is that something?
Correct. There's a two-prong approach. One is your typical retail and get your institutional engagement, your off-season engagement, and making sure that management's talking and discussing and engaging with the governance side of the fund, but two, to make sure that that IRO is working and talking and engaging with the portfolio manager of that fund to keep that investor, hopefully they increase their position and keep that ongoing robust investor relations campaign to keep investors coming in, institutional investors coming in, because like I said, it's much easier to engage with that population of say 10 or 20 or 30 entities or professionally managed money than to talk to and engage with 20 or 30,000 of which many of those people are going to be disinterested.
Right. Well, I mean, I think this has hopefully been really helpful to our viewers. I hope everybody who's on the issuer side who has a chance to look at this takes some time to evaluate their shareholder base and determine what they need to do in order to secure these votes going forward. And any advisors out there that want to talk to us further about this, please feel free to ping Joe or myself. We'd be happy to hop on a call or a Zoom and talk to you guys about this in detail and talk to you about how we can help your specific company and what your specific strategy should look like.
Great. Thanks, Brian. I appreciate the time today. It's nice to see you.
Yeah, good to see you too, Joe. We'll be in the office soon.
All right.